Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Hindustan Composite. Is it a multi-bagger or is it at least a buy at these levels or an avoid? So let's understand this. Let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Hindustan Composite, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. Take the membership on the 2nd of every month because it has a monthly cycle from 2nd of every month. If you want a direct you can say one-on-one talk with me with respect to number of stocks you're holding, you can directly email me. Now about the company, Hindustan Composite was established in 1964 and they are into auto components and parts manufacturing. It boasts of marquee clients, leader in manufacturing brake lines, clutch lines, roll linings, mainly produces friction materials for autos. Their products have application in a number of industries such as automotives. They also make products for railways, engineering, mining, aerospace, steel, chemicals, oil exploration, etc. So it's a gamut of products that they have for a number of industries, and it's like a conglomerate type. But the market cap of the company, it has run up a bit over the last 1 week, but before that the market cap was around 350 crores. If you look at the numbers, and the numbers look pretty good. So this is Q2 numbers. So 44.5 crores versus 42.9 crores with a market cap of around 350 crores. If you take annualized on an annualized basis, this would come out to be somewhere around 260 to 70 crores. And if things really go right, then we could see the numbers to be around 300 crores. So for a company to be around 400 crores with sales number of 320 crores, you can very well understand that once things normalize and things really get better in terms of you can say the industry and automotive sector really does well, automobile ancillary, this could really shoot up. So 400 crores, just understand this, that 300 crore sales, 400 crores of you can say, so around 200 crore sales right now. So let's say 250 crore sales and 400 crores market cap. I still believe that there's a long way to go before this ends up. So maybe just because of market cap of sales, just taking into that into account, we could see the numbers go up to even 1,000 crores for this stock. It's a debt free company. Return ratios are extremely low, and that is probably the reason the stock is dwindling down, but there's a very high promoter holding of 74%. If you look at the performance of the stock, a decent auto ancillary company, it's not that bad, but it's not top notch. It's not like a Motherson Sumi or an Endurance Tech or a Wheels India, Steel Strip Wheels, etc., which are pretty good and large based, you can say, global companies. This is a smaller company in that regard, but and it has been a laggard with respect to, you can say, operational efficiencies, etc., and so the ratios are not that great. But whenever the cycle really moves strong, then these are the companies that really turns the corner and make a lot of money for investors. So it's a kind of a risky thing to get into, risky stock into auto ancillary. I won't say it would give you peaceful nights and etc., but it's a risky buy at these levels currently. A product pipeline for the company is pretty good, and I believe that going forward it should increase, as I'm bullish on the auto ancillary space for the next 2 to 3 years, and I won't back out in saying that the index per se of auto index etc. will continue to move higher once this correction ends. So in that regard and in that respect, I believe that having a larger product pipeline and better, you can say, margins going forward, the company could end up doing well. Remember that on a stock basis, on a 5 year basis, the stock has done nothing. Till, I mean, 2 weeks back, a week back, the presentation I made was about 2 3 weeks back, and so 260 70, it was around 240 50 4 5 years back. It's in the same range at the moment, and eventually it broke out of those levels, so it hasn't done that greatly. Results have been up and down, but September bottom line surged on back of other income. So you need to understand that Q2 numbers that came out, it was other income that boosted the numbers on the bottom line. Otherwise results would have been tepid, as it has been the case over the last, you can say, 3 4 quarters. And you need to understand that when the whole space has gone through a total turmoil from February March, and in fact the industry itself has gone through a very difficult phase when you consider from 2018 January onwards. So FY19, second half of FY19, full FY20 has gone like this, and even full FY21. So it has been 2.5 years of complete lull for the industry. I won't be surprised if things really get better, say from the second half of 2021. Low return ratios is a case of concern, but if sales grow, then profitability in the end will end up growing, and this is what I'm banking on. Plus the sales to market cap ratio is low for the company. This is another point that is in favor of the stock. The valuations are not that stretched in my opinion. So why the slowdown took place altogether? So auto industry went through a stress, and the stress continued. So from 2017 October November, it was the peak really, and at that point of time the stocks were also at the peak, and so FY17 I'm sorry, FY17 was perhaps the best year so far in the last 4 5 years. And then from there on in, it was a slide, and there was lesser demand, there was slowdown in the economy, and that was palpable. And eventually, it culminated into the pandemic, and then we had a complete shutdown of the business for at least a shutdown that went on for at least 45 50 days. So around 7 weeks, there was no work. So it was complete. Turmoil with respect to the whole auto ancillary space. Commercial vehicle segment was the most hit, and you need to understand that commercial vehicles are the most that they serve to. It is a major chunk of their revenue, and so now that the commercial vehicle business is coming back, now that there is a chance that with the budget around, there could be announcements for infrastructure, for real estate growth and development, and so commercial vehicles will be in demand, and so these kind of stocks may continue to do well. I'm always of the opinion of you can say looking into stocks which could be ancillary or proxy plays to real estate and infrastructure, rather than buying infra stocks altogether. So this is one such stock. Economic slowdown hurt the infra to the core, and that hurt, you can say, auto ancillary companies which used to serve large vehicles, commercial vehicles, heavy commercial vehicles, etc. See, there could be, so in 2019 there was projection of further stress, and then so there was complete, you can say, slam dunk of these kind of stocks. And when the pandemic hit, it meant that many of the large investors thought that next 2 years there would be no, you can say, virtually no growth in this sector altogether, and so the stock went, you can say, vertically down. But now I am seeing that, and most of the analysts are also speaking about it, that we could have uh, a good recovery going forward, and probably second half of 2021 could be really good. So the next 6 months could be the time to really accumulate the stock over the next 3 to 6 months, next 1 2 quarter, and let's see how it goes. If this really works out, the profits could be made, could be huge. So as I was mentioning, that if things really work out well for investors, these kind of stocks could really make money going forward. After 6 months, we could see that the numbers after 1 or 2 quarters could really improve going forward. So the next 3 to 5 months, one can accumulate the stock. So the sector went out of favor at that point of time, and there was people were looking at companies which are more into chemicals, which are more into diagnostics, etc., and so on and so forth, or some IT, mid cap IT, etc., rather than looking at into, you can say, economy related stocks, such as Hindustan Composite, or stocks which are into automobile or the auto industry. So if you look at the technicals, then there is a major long-term support in the 190 to 210 band, in this 20 rupee band, and a short-term support is around 275. In fact, when I made the presentation, the stock was well below 275, and the run-up, I mean, in 3-4 sessions, it has gone from 250 to 310, 320, and 275 was seemed like a very strong resistance. So right now it will act as a very good support, and above 300 we could expect a very big up move towards 400, 450. That's my understanding, but at the moment the markets are looking very jittery, so you need to understand that and probably respect what the market is doing. Wait for the total market correction to end. Probably 13,000 to 12,800 is what I'm looking at, and so you could get the stock at 270, 275. That would be a good level. If you want to buy immediately, probably keep a stop loss at 270, otherwise wait for 280, 275. Keep a stop loss of 15% lower than that at 230 or so, and then let's see how it goes, because the stock could do really well on a 2 to 3 year basis, but next 6 months could be volatile. So it is getting stronger on the charts, but it's a very volatile stock, illiquid stock, so kindly take those points to note. So my call on the stock is that hold if you have it, and it can be a risky buy, as I have explained all throughout this presentation. Cycle is on the cusp of turning around, and probably has turned around with the numbers that we are seeing for TVS, for Maruti, for M&M, etc., and Escorts, and so on and so forth. I think auto industry has turned, and don't make the mistake of understanding that this is the best, or these will be the best numbers, and numbers will decline. I think numbers will surge going forward in the next 1 or 2 years, once things start normalizing even further. So corrections are very good opportunity to get into better stocks. I'm not talking of Hindustan Composite, but other kind of stocks. It is not the best in the space, and that's why it has not run up. If you cannot handle volatility, and if you cannot handle major, you can say, movements of 20-30% up and down, avoid this sort of a stock and put only 5% of your total investment. So this was my video on Hindustan Composite. Please like and subscribe my channel and hit the bell icon so that you get my videos straight away when I post it. Thanks a lot for watching.